Ray, and everyone else, thank you so much for the opportunity to work with you and to earn your trust and to be able to guide you throughout the Forex market. Tonight's topic is all about reversals, okay? It's candlestick formations and patterns to help you identify reversals and opportunities, okay? So we're going to get into the live market. We're going to be discussing for about an hour tonight, King's Crown formation, what tools can help you. We will be getting into the live market as well and identifying a handful of currency pairs which can really assist you and what to spot out, when to use them, when not to use them, and what technology advantages. At the end of this presentation, more towards an hour into the presentation, we'll begin to discuss grid trading. Now, we've talked about grid trading quite a bit over the last few weeks, so actually last 2 weeks. And for those of you who are joining us for the very first time, if you haven't seen it yet, I would encourage you to stick around to the end of the presentation. I'm going to be displaying the technology of that aspect. For those of you that want a refresher, stick around as well. I'll be more than happy to do like a little Q&A, questions and answers with you. But before we jump into the live market, it is important you understand there is risk involved. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. What that basically means is that we cannot place trades for you. That means we cannot place trades for you. We can show you exactly what to do and how to do it. We can put you in a position of empowerment, but ultimately you have the entire control. You can decide to place a trade or pass on the trade. You can decide to over leverage or under leverage. You can decide to follow the rules or not follow the rules. We will do our very best to empower you to make the most intentional and appropriate decision based upon odds, but ultimately you will have to make the decision, okay? So for those of you who are brand new, let me introduce myself. My name is Joshua Martinez, and I am Market Traders Institute's Director of Client Success. Now, I've personally taken a $500 US initial deposit investment. I've been able to turn it into over $39,000 US of profit from it. I'm a published author, international speaker, professional analyst. I've trained tens of thousands of investors from all around the world. I'm a full-time trader known throughout the Forex community as FX Pathfinder. Now, you may have already seen me, heard of me, or read about me in the following areas: Your Trading Edge, FX Trader Magazine, Equities.com, Forex Crunch, Executive Trader, TraderPlanet.com. I run the mastermind group here within Market Traders Institute. I am the creator of the leveling program. The last 15 months, I've had 15 consecutive gains, which means I have not had a losing month in over 15 months. I'm currently net positive over 42,000 pips in the last 15 months, winning over 76% of my closed position. So with that being said, let's go ahead and get started. Let's jump into the live market. Let's discuss reversal opportunities, what to look for, and how to utilize it, okay? So a currency pair which I want to bring up this evening is going to be the euro against the Australian dollar. EURAUD. We're going to bring up the daily time frame. And with the euro Australian dollar, we can go ahead and discuss what the heck is going on with this thing. So as you can see from the French elections, the euro has gained tremendous strength against the Australian dollar, okay? So the question is the market at a high price to where the market could begin to retrace bearish? And if it is, what can we use to help us or to signify or to signal that the bears are starting to take back control? Okay, so first things first, yes or no, would you agree that the euro against the Australian dollar has been completely bullish and has spent 1, 2, 3, 4, 5, 6, 7, 8, now potentially 9 days of just pushing up? Type in yes if you can visually and spatially see that. Okay, good. Now, I want you to think for a moment. What can we do to say, okay, we're at a high price? What evidence, what tools can we bring in to help you make the intentional decision to say, hey, we're actually coming down? Education specialist, please be so kind to respond to Klein regarding the audio. Eric says you can use trend lines. Love it. David says trend lines and Fibonacci's. Yes. Michael says Fibonacci. So let's start out with fibs. And Fibonacci's are going to help us maintain the wave movement, because the wave movement just basically says, hey, higher highs, higher lows, higher highs, higher lows. Here's your uptrend line. Your uptrend line states that we are in the buy zone, which is fantastic. The market is bullish, and we kind of have an idea that we're at a high price, but we'll bring in Fibonacci's or smart fibs. And according to the Fibonacci's, and just for more education purposes, we will take off the auto fibs and leave the most recent one. All I want you to say is yes or no, but yes or no, did the market hit a 1.618 extension? Yes or no? Now, we had a Fibonacci retracement deeper, making the D the 1.27, but it just so happens with the French election, the momentum increased, the market has fulfilled the Fibonacci 1.618. Now, what happens when a Fibonacci extension is fulfilled? What happens, percentage speaking? Yeah, Devin says it retraces. Gary says it pulls back, right? And so here's something in which I really enjoy. Lyle says it pulls back. This is something in which I really enjoy. If I think the market is going to fall, I like to look left. If the market has U-turned on the price point that I think the market will fall, I usually win. Type in yes, why yes, if you've copied that down, written that down, put a star next to it, taken a picture of it, do something, because this is going to be very, very, very beneficial to the future of your trading. Because what you begin to do is you slowly begin to stack all the odds in your favor. And what the heck and how the heck do I do this? Well, basically all I do is I bring in a horizontal line and I just say, hey, look, if the market's going to fall, it probably has already fallen or U-turn on this line. So let's just look left. And why don't you tell me, does the market have history of forming a low, 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 a high, a high, a high, and a high on this blue line, yes or no? Does the market U-turn on the blue line at the same price point as that 1.618 D extension? Okay, now what you have to do is you have to then, what you then have to do is you have to then begin to be intentional about asking yourself, if I were to see this example 100 times, what would the market do most? Okay, now think about this for a moment. The market U-turns when it touches this blue line. You can easily see that and you can agree with that, okay? So you know that for the most part, the market forms highs and lows versus actually breaking through. When you zoom in and you say to yourself, okay, we are fulfilling a D extension at that U-turn level. At the same time, the market has been pushing bullish for 1, 2, 3, 4, 5, 6, 7, 8 on our 9th day, so we're considered to be overbought. All I want you to say is up or down. If you were to see this example 100 times, what would the market do most? Would it go up or would it go down? Think about it and then type it in. Up or down. Down. Down, down, down. Okay. Now, think. If the market is going to go down based upon the U-turn, based upon the high price, based upon the D extension, where could the market fall to? Well, Eric says the trend line. Okay, that makes sense. So let's think about this for a moment. So the market is making higher highs and higher lows. Market moves in waves, higher highs, higher lows, higher highs, higher lows, higher highs. Why would the market move to the uptrend line? Well, because that's where the market goes up. So that makes a lot of sense. So you can say, okay, well, the market's going to move back to the uptrend line. But you then have to ask yourself the question, okay, how far away is that? That is a total of 430 pips. Do you think the market's going to fall 430 pips in a straight line, or do you think it's going to fall in waves? In waves, okay? So if the theory is to say, okay, well, the market's not going to fall a straight line, so we can't plan for that. Instead, the market's probably going to do something like this just because the odds say it doesn't move in straight lines. So if we really want to do this right, the opportunity right now is to find this low. And so now the question is, where is this low going to be? Type into the question section box what you think. What can we do to help us find this low? Trish says we can go lower time frames. Yes, probably find like a D extension. I agree with that. Chris says 1.4420. Craig says, what about using like a 382? I like that as well. John says, what about just looking left? Okay, so let's think for a moment. If I were to look left, what would be the purpose of looking left? Well, the purpose of looking left would just basically say, okay, well, if the market forms highs and lows within inside the same areas, is it plausible to say that the market's probably going to go to 1.4309, the previous B high, and then have like a little bounce? And if the market were to do that, so let's just say, if it were to do that and were to bounce, if we were to pretend to spread Fibonacci's, would we have a D extension which aligns with the uptrend line? Would this D extension align with the uptrend line? Yeah, so that looks pretty good there. So that looks good. But, remember what we said, the market forms highs and lows within inside of the same price points and angles. So what if we were just to bring in a horizontal line and say, okay, if the market were to fall here, does the market have history of forming U-turns at, on, or around 4,300? I think the only thing that this market really has is just a little baby area. I shouldn't say baby area, but like a very young or unestablished area, which is very recent, since December 2016. So it was only been like a year. But type in yes if you can see that there's a low price, there's a high price, there's a high price, there's a high price, there's a high price. So that does make a little bit of sense that the more likely the market's going to form a low around this area. Okay. Could go lower, but we're going to play the conservative game. Now, what price point is that? 4309. So 1.4309 is going to be the daily future support. That will be a limit. And current price point is 4582 minus 4309. It's 273 pips away. 273. Okay. All right. Now, this is considered a short-term move. Does everybody understand that? This is a short-term opportunity. Now, what that basically means is that you're not going to be selling this for thousands and thousands and thousands of pips. You're just going to be looking to sell this for 273 pips, and that's as far as it goes. So what I want to do is I want to then turn, yes, Scott, you're up to date. I'm just using, remember I'm using grid trading. I have the grid trading software, so my is going to be a little bit higher just because I'm doing the testing. Okay. So what I want you to think about, because just hear me out, I'm going to try to connect the dots. Now, I'm going to do my very best before we go to the 1 hour time frame. I want you to look at these bullish candlestick formations. And I want you to pretend that the orange line in which I'm bringing on is the 1 hour trend. And all I'm doing is connecting from a line from the low price to the high price of the candlestick, and then from the high price to the next low price of the candlestick. Type in yes if you can see the bullish trend. Now, for this market to fall 273 pips, what's going to happen is you're going to see potentially an indecision day in the next 24 hours. The market may spike up, the market may come down. But over the next 3 days, you will see bearish candlesticks. But off your smaller time frame, it's going to be a bearish trend. And a crown formation is when a bullish trend meets a bearish trend, and therefore you have the transfer of power between the sellers and the buyers, or the buyers and the sellers. Type in yes if you can visually see what's happening. So what we're doing is we're playing the pretend game, okay? And we're saying to ourselves, hey, there's the uptrend, there's the downtrend. Let's go to the 1 hour time frame and let's look for a bearish crown. And if we receive a bearish crown, it would increase the winning percent. Does that make sense? Now, tonight is all about reversals. Tonight's all about helping you find the areas and candlestick formations which identify the reversals. And so that's why we're staying so focused on these high prices and low prices, okay, and these U-turn areas. So what we're going to do is we're going to go to the 1 hour time frame, and we're going to bring up on the 1 hour time frame the end goal of mine. So we're going to go Euro Aussie, 1 hour time frame, end goal of mine. This is a short-term move, which will be 1.4309. 1.4309. 1.4309. So 1.4309 is daily future support. That is a limit. That is 273 pips away. Okay. Now, then you can do 1.4575 area. That's going to be the daily resistance. just so we can leave that there. This is your daily resistance. Okay. Now, let's think. Let's just look at this for a moment. Let's just look. Let me zoom in here. Let's just look. Do you see the uptrend of higher highs and higher lows? Do you see the uptrend? Okay. Do you see how the market could form a downtrend? What are the rules of a crown formation? What are the rules of a crown formation? You know what they are? Let's outline what the rules are. Step one of a crown. The market needs to break the trend line. Okay? So if this is the market making higher highs and higher lows, higher highs and higher lows, step one is the market needs to break the uptrend line. That's number one. Step two, the market needs to come down and meet or take out the previous low of to the left and to the right. That's step two. Step three, identify the left tip. Step four, anticipate the right tip. Usually, the right tip is the same price point as the left tip. So crowns do enjoy the ability of having the same price points of left tips and right tips. Why? Markets like to form highs and lows inside the same areas. Step five, draw your new down A, B, C, D swings and connect the center tip to the right tip. Now, whenever you think that there is a crown formation, what I want you to do is I would like for you to go to this tool that says patterns, okay? And I want you to left click over patterns, and then I want you to left click over King's Crown. When you left click over King's Crown, you can then outline your crown formation and what you think. You're going to left click at the beginning of the left tip, and you're going to drag it up to where you think you found the left tip. Then you click. Then you drag you don't have to hold it, just click, then you drag it to where you think the left tip has been completed. And then the center tip. And then the right tip. And it's going to highlight your crown. If your crown is green, you can trade it. If your crown is not green, you can't trade it. Why? You see, do me a favor, everyone type in a yes if you can see this B. You can see A, B, C, D. A, B, C, D, okay. If this B low, if it's not lower than the previous, than the left, than this support level, if this B low is not lower, it will not turn green. If your B is not lower than the previous two left to the right, it's not considered a crown. Does everybody see the difference? Above support, no go. Below support, ago. So in theory, if I were to draw this out and I were to do this again and I were to say, okay, well, here's my smart trend line. Here's the uptrend. For this market to be considered a crown, I need to find that to the left and to the right, which is, what is this low price? 4528, 4528. So it's going to have to be this low. If the market is unable to take out the low 4518, it's not a crown. And what happens? Okay, we'll watch this. Type in ME if you've ever seen a false trend line break. Okay. If the market does this, that's not a crown. That's not a crown. Matter of fact, that could be what's called shifting of channels, to where instead of the market making higher highs and higher lows above the trend line, the market makes higher highs and higher lows below the trend line. Type in yes if you can see the concept of shifting channels. Okay, perfect. Now, a clear sign of a channel shift is when the market does not take out the previous low. That is why when we say, hey, put your tool on here, and if the market takes out the previous low, it's more than likely going to work. Because if the market is able to take out this previous low, and the market is to fall, it will increase the odds of a true reversal. Does this logically make sense? Okay, good. Now, what do we do with this information? Well, let's plug this back in. We're looking for a limit of, from the Euro Aussie, a price point 1.4309. And we're looking for this market to fall bearish based upon the daily time frame hitting resistance and the daily time frame hitting a D extension. 1.4309 is daily future support. That's a limit. That's 273 pips away. There's two things which you can do. You can sell the market now, which is an option. You can just sell it right now. Or you can wait for a trend line break, or you can wait for a crown. And since tonight's lesson is about crowns, I'm going to highlight the crown. And so therefore, all we're going to do is we're going to wait for this market to establish the highest winning percent reversal pattern, which is simple. Comes down, takes out this low, rallies up, gives you a counter trend line break, bearish, sell it, you got yourself a crown. That's the short. You can bring on your crown tool, which I would encourage you to search for, but it's important that you understand that at the end of the day, this is going to be your entry. Market comes down, takes out forms a low, lower than the previous low, and then you just sell the market. Falls down, takes out this low, pulls back, sell the counter trend line break, bearish. Bingo. Okay, so let me type this out. Entry, waiting for the market to take out the last low of support, then selling a counter trend line break bearish. That will be a bear crown. Limit 1.4309, about 273 pips away. Where's a stop? Well, you can place your stop 20 pips above the center tip high, which would be 0.2, 22. Give it a little bit of wiggle room. Stop 1.4622. Expectation of risk is going to be right in the ballpark of 60 pips, give or take. We can round that up to 65 pips. So the question is, would you be willing to sell this market risking 60 pips or 65 pips to make 273 pips? I think this is, if you're a day trader or a scalper, this is a nice short trade. Go ahead and type in done, D-O-N-E, when you have this copied down. Type in done, D-O-N-E, when you have this copied down. Excuse me. Okay, perfect, perfect, perfect. Okay, give me a currency pair in which you think is about to reverse. Give me a currency pair which you think is about to reverse. It's going to make the transition from a high price to low price or low price to high price. Devin says, or David says, EuroCAD. Ooh, everyone's in EuroCAD. Okay, perfect. I'm currently short the EuroCAD myself. We've had some really great success with the EuroCAD, about 150 pips in the last 24 hours. And now we are looking for the EuroCAD to produce the next run. So after you see the Euro Aussie, we'll bring up the EuroCAD. Excuse me. Oh, by the way, here's my Facebook link. This is my professional. Look at this. Live contributors can now broadcast on behalf of your page. Allow people who aren't admins to start live broadcasting on your page. Whoa, that's new. Here is a link to my professional Facebook page. If you have Facebook, you know, real quick question. So last year, I created a video series on what's called So You Want to Be a Trader. And it is basically a 12 lesson video series. I designed it for brand new traders. They're short, simple, 3 to 5 minute video clips on exercises in which you can apply and use, focusing in on the end goal of mine. It's on YouTube. So if you click on that link in the question section box, you can bring it to my page. What I was thinking about doing is starting So You Want to Be a Trader Season 2. So I already have my first season done. That was done about 1 to 2 years ago. And what I'm trying to do is gauge the student body to see if they would be interested or if they would watch season 2. Okay, so if that's something that you would be interested in, what I want you to do is I want you to click on the link in the question section box that I'm sending you right now. And what I would like for you to do is just leave a comment saying, hey Josh, I would be interested. The reason why I'm asking you to do that isn't to sit here and say I want comments, is because I use this information for leverage when I go to meetings within Market Traders Institute and saying, hey, there's a demand for season 2, I need resources. And this is the reason why. Now, this is free, doesn't cost a thing, it's absolutely free, we don't charge for it. It's something in which, if that's something you'd be interested in, go ahead and leave a comment, okay? So super simple. Now, currency, EuroCAD, EURCAD, EURCAD, it's both the daily time frame. Now, when we look at the EuroCAD daily time frame, what I really like is whenever I see the market like at a really, really high price, I think to myself, oh, this is going to be such a simple sell. Whenever I see the market at an extreme low price, I think to myself, this is going to make buying so simple, right? Because how money is made is buying low and selling high. But whenever the market is exhausted and has been pushing bullish or pushing bearish, and it's exhausted itself, and then basically you look at the market and you say to yourself, this thing can't move any further, those are your best trades. And so when I look at the euro against the Canadian dollar and I say to myself, holy smokes, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of just straight bullish movement. The market's already rallied up bullish 854 pips. If this was the A and this was the B, we got a D extension being hit, even though that's not a proper high, but it's really the only thing we have going for us. This thing has to come down. Type in yes if you're starting to see what I'm seeing. This thing's exhausted. This thing's gone up almost 900 pips. This thing's been pushing for 10 days. This thing, all of a sudden, out of nowhere, halted and formed an indecision day. And then you say to yourself, well, why is that? How? What would stop a train like this? What? The market just moved almost 900 pips in 10 days. What stopped it? And then you go to work. So think about it. Markets forms highs and lows within inside the same areas. Basic stuff. Where's your trend line? All I want you to say is yes or no. Does the market form highs and lows at, on, or around this downtrend line? Yes. Okay. Second thing. If I think that this market's going to fall bearish, what can I do to make my life really easy? What can I do? If I think the market's going to fall bearish, what can build me tremendous confidence as an investor? I can look left. I can just look left. I can just say, hey, if I think the market's going to fall bearish, let me just see if the market forms highs and lows at this area. If it does, it's going to make me feel fantastic. Okay? So, does the market have history of forming highs and lows at this area? There's a U-turn, 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 there's a U-turn. There's one, there's one, there's one, there's another one. There you are. And so now what you have to do is you have to ask yourself as a trader that's looking for confidence, you just have to say, hey, with the market hitting or being on a downtrend line that pushes the market down, at the same time hitting a U-turn level, at the same time being exhausted bullish, do you think that there's going to be somewhat of a bearish reaction? Yes or no? And would you be comfortable looking for selling opportunities at this price point? And if a selling opportunity did occur, is there enough evidence to encourage you to take action? For me, the answer is yes. I'm already selling this market. This is one of those trades to where if I were to see this 100 times, the market would fall more times than the market would go up. So therefore, I'm actively looking to sell. Now, I could be wrong. Very funny, Liv. Very funny. I could be wrong. You know what? The market, what I'm looking at is I'm saying to myself, okay, well, the market could do this. I could be wrong. So what if the market And this is how I like to trade. Now look, just look at me, just listen to me, okay? I like to trade to where I can make money even if my long-term analysis is wrong. Now what does that mean? It means this. Even if the buyers were to maintain control, the market would have to, percentage speaking, fall down before it would go up. Which really means even if my long-term outlook is wrong, I have enough short-term movement to make an income. So I would like for the market just to fall bearish. But even if I'm wrong, it does open the door to still making a profit. Does this make sense? And so when you look at the market and you are trying to find trades, you need to ask yourself the question, okay, if I think this market's going to go up, if I think this market's going to go down, is the market in a position to generate an income even if I'm wrong? Even if the buyers, I'm looking to sell, but even if the buyers maintain control, are we high enough for a natural short-term bear wave to push me into the profit? In my opinion, the answer is yes. Okay. So if the market were to fall, a very nice short-term exit would be resistance becoming support. The market likes to form highs and lows inside the same area. Whenever you have an exhausted or a large bull move up and a large bull move down, there's a reason why the market pinpointed there. Now, mark that price point. That high is 4597, 1.4597. This is going to be the limit. Okay, this is going to be daily future support. This is going to be the limit. How far away is that? Okay, so 4850 minus 4597, 253 pips away. So 253. Now, this could be a long-term bearish reversal based upon the downtrend line, or this could be a short-term retracement if the bulls maintain control. The great thing about this opportunity is that we are inside the area where the market should have a bear move, whether it's going to be a long-term move or a short-term move. Now, let's go to the 1 hour time frame and let's just see if there is a selling opportunity for traders who are outside the trade trying to get in. So let's see. EUR CAD 1 hour time frame. Let's pull that up. We're going to carry over the limit, which in my opinion is very, very important. 1.4597, 5, 1.4597 is going to be the daily future support. That will be a limit of 253 pips away. And let's just look. Now, if I were to draw my smart trend lines, we see that we now have a trend line that's pushing this market up. Now, I entered in selling based upon the inner trend line breaking and the market giving counter trend line breaks bearish from last night, plus there was an old D extension. Seems as if this market has held. Now, now look, for me it's easy because I've been doing this for a long time. But for you, this is where the trust hurdle comes in. So let me ask the question. Okay? The question is this. Excuse me. Do you believe, based upon the Euro-Canadian dollar daily time frame, at a downtrend line, at an area of U-turn that's been holding since October 2015, do you believe that that's going to push the market bearish? Make a decision, yes or no. Do you believe that there's going to be a bearish movement even though the 1 hour time frame reacted bullish off of the uptrend line? Make a decision, yes or no. So why the heck did this market form or move bullish? Just think. Just look at your charts. Let's look at the daily for a moment. Let's back this off for a moment. And I just want you to look and just ask yourself. The top chart is the daily time frame. How many candlesticks does it take, ideally, to form an evening star? How many candlesticks does it take to form an evening star? Just think. 3, decision, indecision, decision. If this market falls bearish, as it is expected to, this would be an evening star. Does everybody see that? A decision, indecision, decision. Which means in the last 24 hours was the indecision movement, which is the fight between the bulls and the bears, to where you had a decisional movement up. Last 24 hours is your indecision movement. Next 24 hours could be the decisional movement, which means the reason why this market reacted bullish is so that there could be an indecision day off of the daily time frame to where the market fell bearish and then rallied back up. Type in yes if you're starting to see the correlation of the larger time frames and the smaller time frames. Because the reality of this is, here is your daily decisional candlestick. Here is your daily indecision candlestick with a long wick. And then if this market is going to maintain a bear reversal, the next 24 hours will be your bear decision. So it is my personal belief, based upon everything which we saw, the reason why the market reacted bullish is because we were forming the indecision candlestick off the daily time frame before the transfer of power is complete. Everybody beginning to see this? Now, one of the things which I do not want you to do is I do not want you to jump into the market selling just because I jumped into the market selling. I entered in based upon a strategic methodology, okay? Right now, I am in a negative position. There's no secret. I'm in a negative position. I shorted the market based upon an earlier U-turn. The market decided to go up. If I was outside of this market trying to get in, this is what I would wait for. If I was outside of the market trying to get in. That's it. Simple. Counter trend line break bearish. Even though I am in a negative position, my expectations for this market is do exactly what you see here. Market is expected to fall bearish, take out the previous low, retest the high, counter trend line break bearish, fall. Why? Because the market is more than likely going to stay within this group and more than likely create some sort of range of support and resistance as it consolidates off the daily. And so therefore, you're going to see the market stick around this price point going up and down, up and down, up and down until it actually reverses. And so the entry, if I was outside of this trade trying to get in, my entry would be simple. Counter trend line break bearish in the sell zone. Stop. 15 pips above last high of U-turn. That's it. So the market were to fall down and give me this entry, my stop would go 60, 75. Expectation of risk, because that will be the entry to sell, would be about 90 pips. The reward will be about 253 pips. Go ahead and type in done, D-O-N-E, when you have this copy down. Excuse me. Just type in done, D-O-N-E, when you have this copy down. Okay. Give me another one. Oh yeah, Linux says grid would solve this. I agree with you. I think grid would be awesome in this. This is simple. This is a simple one. Deborah says, hey, can we do the Euro NZD? Yeah, we haven't looked at the Euro NZD in a while. So let's do that. Let's see what the Euro NZD is doing. EUR NZD. Look at the monthly time frame. Oh, Dave, you're gonna get the all the grid materials. Whoa, look at the Euro NZD, big push. You're gonna get all the grid materials when we have the class, like basically in like a few weeks. Okay. Now, what the heck is going on with this currency pair? Well, the market. Well, let's get rid of this. Well, the market on the Euro NZD broke the old downtrend line, has an up AB boundary, broke the short-term bear retracement, gave us a 8.6 retracement. D extension is the 1.18. So 1.9396, 1.9396. 1.9396 is going to be the limit. So how far away is this? 93.96 minus 58.02. It's 3,594 pips. So 3,594. 3,594 pips. This is the monthly D. That's a lot of pips. So what I want to do is I want to go to my smaller time frames, and what I would like to do is off my smaller time frames is I would like to strategically look to buy the market long term at low prices. If there's a high price, for those of you like the day trader scalp, you can look for the reversals. So let's go to the daily time frame. EURNZD. That's a huge move, massive move. Okay. Let's focus in on just the bulls, the buyers. Outer trend line, inner trend line. Here's the outer or long term. Here's the inner. Okay. Here's our up smart Fibonacci's. The Euro NZD daily time frame is 5986. 1.5986 is the daily D. That will be a great spot to limit out at. 5803. 5803 minus 5986. 183 pips away. 183. Okay. 1.5986 is a wonderful area to sell. Why? Well, because it's the daily D extension. The market's pretty much exhausted. It's going to be interesting to see if the market retraces now or if it goes up. Now, what does that mean? Well, there's two things that's going to happen here. Market's going to go down, and then it's going to go up, and then back down. Second, market goes up, then goes back down. I don't know if the market's going to go down now or the market's going to go up before it goes down. But according to the pattern, we're going to receive a larger bear movement. So a larger bear movement is coming. So what does this mean to you? Okay. If you were to sell this market, just make sure your stop's above the 1.618. Excuse me. Okay. Now, if you were to sell this market, just make sure your stop's above the 1.618. But this one's a hard one because there's a lot of justifications for the market to fall now. Wow, look at this. Wow. Look at this. These are beautiful U-turns too. Low price, a low price, a low price, a high price, a high price, a high price. Okay. This is a perfect scenario for grid trading. This is an amazing scenario for grid trading. Okay. Technically trading, this is tough because if you're going to technically trade this, what you're going to want to do is you're going to want to wait to sell the market if it hits the D extension, or wait to buy the market if it comes near the uptrend line. So if you're going to technically trade this, you really need to wait for the market to hit the D extension or to fall down and buy it back up towards support. Type in yes, why yes if you understand that. If you're going to technically trade this, you're going to want to sell it at the D extension or buy it at the uptrend line. Trying to enter in the market right now is going to be a challenge. I know that there is a resistance level. I get it. I know that there's a strong U-turn level. I see it. But the issue is you got that D extension. There's still a lot of momentum. No, I agree with you. The bears going to look to fall. The exit will be the B high. That will be 54.31. So if you want to start the selling process now or sell it at the D extension, it's going to be 54.31. 1.543, sorry, 1.5453, 1.5453 daily support, great limit for short trade. And what does that really mean? That just really opens the door to how much? 5986 minus 5453, about 500 pips. Okay. We got to talk about grid trading. It's 8 o'clock, so we got to start. We got to bring in grid trading. But let's recap what we've gone over so far. We went over the Euro CAD. We talked about the Euro CAD being a fantastic short trade after it breaks the counter trend line. Limit is 1.4597. Stops 15 pips above the previous high of U-turn. Okay. We discussed the Euro Aussie being a great short trade after it gives us a crown formation bearish. Counter trend line break bearish in the 1 hour time frame. Stops 1.4622. Limits 1.4309. We received a requested currency pair, which was the Euro NZD. We discussed long-term Euro NZDs going up, but the challenge is it's hard to decide to buy or sell right now unless you're going to use grid trading because you're just under a D extension, but you're also hitting a daily resistance. So it's tough to decide where to short now. Okay. Did you learn anything today so far? Have you learned anything this evening? We've gone over crown formations. We've gone over U-turns. We've gone over support and resistance. We've gone over larger time frames, smaller time frames. We gave 2 really great short opportunities. We discussed the Euro and ZD being a difficult currency pair right now. We went over a lot tonight. Okay? We're going to talk about grid trading. Many of you have grid trading, and many of you are going to be receiving grid trading in a handful of, or just like a couple weeks, you're going to be receiving it. And you and I are going to be working together within the class, and I'm going to be educating you. And inside that class, I'm going to be finding currency pairs to release the grid and launch the grid on, okay? So what I want to do tonight is I want to try to educate you on the advancements that we have on the grid. I want to review the formula, finding the levels within the grid, and I want to show you how to turn the grid on, how to shut it off. I want to show you how to attach the grid to an existing trade. I want to show you how to remove the grid from an existing trade. I want to share with you how you can edit it and how universal this tool truly is, okay? Now, give me a currency pair, doesn't matter. Grid trading will work on anything. Give me a currency pair, doesn't matter. Devin says Aussie CAD, okay. AUD, CAD. Grid trading works on any currency pair, any time frame, as long as you're following the methodologies and the rules, okay? So, what are the methodologies and what are the rules? Please be so kind to grab a pen and sheet of paper and write down this formula if you haven't already done so, especially if you're brand new. I'm going to teach you how to find a grid, okay? Number 1, 500 bars of memory. Number 2, mark the highest and lowest price. Number 3, measure the distance of the highest and lowest price. Number 4, times that number by 3. Number 5, times that number, divide that number by 2. Number 6, divide that number by the levels in your grid. I am using 10. But I'm going to teach you how to customize it. So sometimes you use 8 levels, and sometimes you use like 5 levels. Sometimes you only use 4 levels, okay? Now, let's do this together. To make sure I have 500 bars of memory, I just click on this little gear box on the left-hand side of my screen. When I left click over that gear box, I then see 500 bars, okay? Done. 2, I want to mark the highest point, just bring in a little horizontal line. There's my highest point, and then there's my lowest point. Got it, okay. Then I need to measure the distance. So I'm going to take out my measuring tool from the low point to the high point. 344 pips. Okay, so 344 pips. Then it says times that number by 3. So what is that? 344 times it by 3. 1,032. So I have 1,032 pips. Now it says take 1,032 pips and divide that number by 2. So what's that? That is 1,032 divided by 2. That's 516 pips. 516 pips. Then it says take 516 pips and divide it by the number of levels in your grid. So if I use 10, what is that? 516 divided by 10. 51. 51 pips. Okay. Now, let's launch the grid. As of right now, I'm the only one that has access to it, but I'm going to be releasing this to you. And this is what you would do to release your grid. You're going to right click over your chart. When you right click over your chart, you're going to have a new feature, a big old M underneath your buy and sell. It's going to say matrix. Left click over matrix and see what happens. Your matrix tab pops up. And we're going to go step by step. The very top is going to say number of levels. I can have up to 10. These will be the number of levels within inside your grid. So if I go to 10, I can go 8, I can go 7, I can go 6. I'm going to teach you when it's appropriate. Second thing, well, how many pips do I want? I mean, what's my lot size? Do I want to do mini lot, micro lot, standard lot? What do I want? Number 3, distance between the levels. That's what we did this formula. So that'll be 51. I can have the grid launch above the market, below the market, or on both sides. If you are a leveling trader, a mastermind trader, or a target trader, you're going to love the above and below aspect. It's going to make your life super simple. Grid traders, we're going to do both sides. I can choose to launch this on an alert, or I can use this by just simply doing market buy or market sell. What does that mean? Well, if you like stochastic RSIs, if you like indicators, if you like alerts or pending orders or alarms or counter trend line breaks, you can create an alert, and then what that will do is activate your grid. So let's just say you're not around your computer, or you're about to go to bed, or you're about to go to work, and you're saying, hey, you know, when market hits this price point, or when the stochastic RSI is overbought or oversold, I want my grid to launch. They can do that, okay? Now, Excuse me. Now, this is a really unique feature. I like this a whole lot. You see where it says close all orders on net pips? Hector, I understand that, my friend, but that's for this example of 10, but it would not be the same thing if it was like for four levels or 3 levels or 2 levels or 6 levels. So that works for this particular example, but see how it says divide by the number of levels in your grid? So if I were to choose like 4, it would be different. Okay. So when I click on this button that says close all orders on net pips, if I were to type in 100, that means whenever I have a net P&L or I am profitable 100 pips, it would automatically close me out. Now, whether I'm in 1 trade or 3 trades, whenever I'm up 100 pips, I would automatically close out. Do me a favor, type in yes if you understand that. If I typed in 200 or 250 or whatever the number is, it's a net closeout. Okay. In this example, I'm going to type in 51 because I'm going to show you a very simple strategy with grid trading. Then I'm going to show you an advanced strategy of grid trading. I can use stops. I can use limits. Watch what happens when I click close. It's going to automatically launch this for me. 3, 2, 1. Yes, it also uses pending orders as well. So you can use pending orders. Now my grid has been launched. And each of these levels are 51 pips away from one another. And I have this program to where if I'm net profitable 51 pips, I'm going to automatically close out. And what I want to do is I want to paint the picture and share with you the everyday life of a grid trader. And what I'm going to be doing is teaching you and sharing with you the art of, number 1, finding the grid, and number 2, launching the grid in the appropriate direction. Okay? So for argument's sake, let's just say you as an investor and you as a trader decided to buy the market. You said, hey, we're hitting a daily D extension off the larger time frames. I think the market is exhausted. We're at a low price. I'm going to buy. So you buy. But you're not overly confident. You're kind of like, well, I'm not really too sure, so I'm going to have this close me out at my next levels. And so what's going to happen here is you're going to say, whenever the market is net 51 pips, because that's the distance between each level, whenever the market is net 51 pips, I'm going to have an automatic closeout. Do me a favor, type in yes if you understand that. So the market, whenever I'm up 51 pips, I'm going to close out of the trade. Okay. Let's see what takes place. Market rallies up, hits the next level. Automatic closeout. Net 51 pips on this example. Now, there's 2 things which you can do. There's the advanced way. For those of you who are advanced traders, will know exactly what to do next. But then there's the I'm still new, I'm novice, not really too sure, I don't really know what I'm doing because I'm still learning, but I would like to win upwards of 90% of my trades. Type in me, M-E, if you're kind of like, hey, I'm still a break-even trader, I'm just getting started, I'm still learning, but I still want to win 90+% of my trades. If that's you, you're going to use the grid and you're going to let the grid do its job. And you're going to relaunch it. And what you're going to do is you're going to say, okay, I bought. I took my 51 pips. But because I don't know what I'm doing, but I still want to win upwards of 90% of my trades, I'm going to buy again. So you relaunch the grid. And then the market hits its next level. and you close out. And then you do the same thing because you really don't know what you're doing too much, but you want to win 90+% of your trades. What do? Relaunch the grid. And the market goes to the next level. And what do? You repeat this process over and over and over again because you understand that the market does the same things within inside of the same areas over and over and over again, and you know that the percentages are within your favor. You use the formula to calculate your grid for protection, and let's see what happens. A lot of sideways move on this one. And then the market hits this level. So what happens? You get your 51 pip closeout. And then what do? You buy in again. Why? Because you're really not too sure what you're doing, but you're taking advantage of the wave movements, and you're letting the grid do its job. And then what happens? Hits its limit. So what do? You buy in again. Why? Because you're really not too sure what you're doing, but you still want to win 90+% of the time, so you let the grid do its job. And then you have another closeout. Type in ME into the question section box if you're starting to see how profitable this truly is. And now this one, you're back into the grid. You're into your third position. And you're at break even now because your first trade's down 50 pips. Your second trade's break even. Your third trade's up 50 pips. All this thing needs to do is pop up like 20 pips, and you're going to be having a net closeout of 51 pips. So this just makes up a little bit higher. You get your net closeout, 51 pips, and you're done. Now, what does this look like? 1, 2, 3, 4, 5, 6 trades, 6 wins. Australian dollar, Canadian dollar. Give me another one. Give me a currency pair. Give me another currency pair. Steve says euro yen. Let's use the euro. Let's use the euro yen. And let's put the grid on top of the euro yen. But let's be a little bit more advanced with it. And so what I want you to do. Wow, look at this euro yen. It's a large move. It's amazing, isn't it? It's amazing how these moves are. Okay. Now just look at the euro yen for a moment. Just look at it. This is your daily time frame. Markets like to form highs and lows within inside of the same areas, and that's just what the market does. Does the market have history of forming U-turns at, on, or around the downtrend line? Okay. Are we at, on, or around the downtrend line? Yes. So let's just think for a moment. What if the market falls bearish? Where could it fall to? Well, here's the previous resistance becoming support. If we were to draw up A, B, C, D swings, A to B, we could use the 382 as assistance, which probably is what we would need to do, which opens the door to like 228 pips. Now, yeah, Eli, this is just a short-term retracement. That's all this is, short-term retracement. Okay. Now, if we go to the 1 hour time frame and we were to say, okay, the market's exhausted, the market's at a high price, maybe I can find some structure off of the 1 hour time frame to help me out. If this market were to fall bearish, here's an area of resistance becoming support. How high is this? And how far away is that? 120.32. So 120.32 is going to be the euro, is going to be 1 hour support. How far away is that? 121.41 minus 120.32. It's 109 pips away. That's really not a whole lot of profit opportunity. Okay, we need another currency pair. Okay, so this is the euro yen. You can look to sell this on a counter trend line break if you're a scalper. Type in yes, why yes, if you understand that if you like scalping the market, there's a short-term scalp trade here. You can bring in down A, B, C, D swings. Here's your A, there's your B. Look at the D extension, perfect alignment, right? Perfect alignment. Beautiful. Okay. Let's try to get something with a little bit more distance. Benjamin says USD Canadian dollar. Okay, let's take a look. USD Canadian dollar. Daily time frame. Ooh, that looks pretty good. Okay. Here's the USD CAD. Daily time frame. Anybody follow oil? Anyone follow oil? Oil is hitting a support level. Oil is getting ready to rally right around towards like the $55 mark. That should help push the US dollar CAD down. If the US dollar CAD does fall, which there's evidence to support it because of the channel, the market could fall towards the support. And the support level is going to be price point 1.3200. 1.3200 is going to be daily support. That will be the limit. Okay. Now, yeah, what's crazy, like if you bring up oil, even right now, if we go to US oil, and we bring up the daily time frame, it's pretty much going to be support, resistance. Does everybody see this? On support. The $55 mark has been a very, very strong resistance level. And typically what ends up happening is when oil goes up, Canada gains strength as a currency, which should drive the US dollar down against Canada. Or US dollar will become weak against the Canadian dollar. Therefore, oil does support this move. Resistance does support this move. 3,200 is a support level. How far away is that? So 3,200 minus 36.27, that's about 427 pips away, 427. So that makes a lot of sense. Okay. So there's 427 pips of bearish movement on the way down. And so we bring up the daily time or the 1 hour time frame. We were to say, okay, well, let's strategically grid trade this. What would that process look like? Well, let's bring it up. USD CAD 1 hour time frame. We would have a limit at 1.32005. So 1.3200 is going to be the 1 hour, the daily support. That will be a limit 427 pips away. Now remember the rules of grid trading. 500 bars of memory. Find and mark the high price and the low price, which we have. Measure the distance. 422, so take 422, times it by 3, divide that by 2, divide it by 10, 63. Right click, matrix. 63 pips is going to be the distance between the grids. Both sides, we're looking to sell this market. The limit is going to be 1.3200321. Go ahead and type in yes. Why yes? If you can see that my grid is now on, and this market's going to strategically enter me in selling as the market falls. Okay. What would it look like if the market were just to fall bearish, and how much could I make if I just let the grid do its job? Okay, let's do the math. Well, the first trade I would make 427 pips. The second trade, I would enter in at 35.65 minus 3,200. It would be 365 pips. The third trade would be 35.02 minus 3,200, 302 pips. My fourth trade, 3439 minus 3,200, 239 pips. Next trade, we entered at 3378 minus 3,200, 178. Then 3313 minus 3,200, 113. Last but not least, 3250 minus 3,200, 50. So what would it look like? Okay. If you let the grid do its job, first trade, you'd be up 427 pips. Second trade, you'd make 365 pips. Third trade, you'd make 302 pips. Fourth trade, you would make 239 pips. Fifth trade, you'd make 178 pips. Sixth trade, you'd make 113 pips. And last but not least, your seventh trade, you'd make 50 pips. For a net of what? A lot. 427 plus 365 plus 302 plus 239 plus 178 plus 113 plus 50. 1674. 1674. Okay. So let me just ask the question in regards to happiness. You have 427 pips of selling opportunity on the way down. Would you be happy turning that into over 1,674 pips of profit? Yes or no? Absolutely. Grid trading is extremely universal. For example, you can attach it to any currency pair, any time frame. So for whatever reason, for argument's sake, let's just say for whatever reason you decided to sell the let's just say you decided to sell the pound Aussie. You just said, hey, I'm selling this market. And then you're kind of like, well, I would like to attach a grid to this. This is all you have to do. Right click, go to matrix, put in your levels. Both sides, sell, and attach the grid. Go ahead and type in yes if you can see that I successfully attached the grid. If I say to myself, okay, well, you know what, I really don't want the grid attached to this anymore, I want to remove this, you know, I decided I don't want to grid trade this anymore. Down here it says matrix, take it off. Type in yes if you can see that I just removed my matrix. So I can apply the grid onto a trade. I can remove the grid from the trade. If I want to, I can even just say, hey, I just want to have the grid below the market. That's all I want to do, and your grid will be below. If I go, oh, dang it, you know, I kind of want to edit this a little bit. What happens? Well, you remove your grid, and you say, well, I really just want my grid to be above. So you just press the above the market, sell, release, and now my grid is only above. Type in yes if you can see that the grid is now only above. So you can customize this. You can attach the grid to an existing trade. You can remove the grid from the existing trade. You can have the grid to be on one side. You can have the grid to be on the other side. You can, how many of you trade with indicators? Type in me, M-E, if you trade with indicators, or with pending buys or pending sells, or with alerts or alarms. You can launch your grid with an alert. You can launch your grid with a pending order. You can launch your grid with your favorite indicator. So therefore, you don't have to be around managing this. This is literally, in my opinion, a dream come true, especially if you're a mastermind investor, a leveling investor, or a target trader investor. So what does this do? End goal of mine, what does it do? So if you know nothing about the Forex market, the goal is for you to win upwards of 90+% of your trades. If you are an existing trader where you have a great strategy, what can grid trading do for you? Well, you can attach it to your favorite strategy, and not only can you win upwards of 90% of the time, but you can also double your production. So if you're a great trader, think double production. If you're new, think of winning upwards of 90% of the time. Before I end this presentation, type in me, M-E, into the question section box if you would like for me to give you the details of the program so that you can make an intentional decision on whether or not you want to join me in the upcoming class. If you're kind of like, hey Josh, I don't have this, but I'm interested. What are the details? Type in me into the question section box right now. So that's Ted, that's Garrett, that's Jonathan, that's Tabitha, that's Pete. Okay. Here is the information. This is what's called the Grid Trading Live class. You have position, swing, and scalp. I'm going to teach you 3 strategies. Strategy 1, strategy 2, and strategy 3 with grid trading. Okay? You're going to learn how to amplify your results with optimizing any entry strategy of your choice up to 90+% win ratio. What do you get with the class? Okay? You get a 4-hour live class, on-demand recordings, access to the Matrix tool, 3 strategies, checklists, manuals, workspaces, ongoing access to the class. Okay. This is what's called universal trading with grid trading. You're going to be able to trade directly from your charts. You can manually launch your grid. You can use alerts or signals or price entries. This is around-the-clock smart technology. Now, we're going to make sure that you're properly taken care of and that this is implemented correctly. So what I'm going to do is I'm going to train you for about 4 hours. We're going to have a live class together, and then within 30 days, you and I are going to work with each other, and you and I are going to have what's called a fill in the gap session. Now, this fill in the gap session is designed for me to answer any questions that you have with experiencing grid trading on your own, and so I can provide you the confirmation and the confidence in which you need to obtain success. Now, expectations, optimize any strategy, amplify results. A must-have for the following traders: mastermind students, leveling students, and target students. If you're a trader that wants to win 90+%, you're going to love this. If you want to take advantage or take control of the wave movements, you're really going to love this. Now, grid trading course, manuals, checklists, live trading follow-ups, unlimited reattendance. This is a total value of $3,495 US. And so what I want to do is I want to put this into perspective in regards to an investment, return on the investment, because this is an investment. And what I want you to do is put your investment caps on, and I want you to ask the question on if this is worth it to you. And so I just want you to be honest with my questions. Let's just say you did this and you used this. If all you got out of it was an extra income of $7,000 to $8,000 a month, month after month after month for the rest of your life, that's all this program did for you, would that be worth this investment, yes or no? Stop and really think about it. Okay, so you do this. You move forward with this, and this is all it does. If all the program did was allow your Forex income to be consistent, to give you the confidence to go buy a new vehicle or a new house and have your mortgage be paid for, or have your card payment paid for through your Forex trading month after month after month, would that be worth the investment? Yes or no? And if all this program did for you was allow you to win upwards of 90+% of your trades so that you could structure your retirement within the next 12 months, would that be worth the investment? Yes or yes? Now look, I would like to incentivize you to take action and put this in your hands today. Why? Well, it's really simple. You have the most volatility within the Forex market that we've seen in quite a while. So therefore, there is an abundant amount of opportunity to generate income. And so this is what I want to do. I would like to ask for your trust commitment today and then your financial commitment 30 days from now. Type in ME, M-E, into the question section box. If you would like to do this for 30 days, get your hands on this for 30 days, join me in a class, have me train you, have me give you my workspaces, have me educate you. You use this tool for 30 days, and then after the 30 days, you make your final financial commitment, and you say, yes, I want to do this, or no, I don't. Type in ME if you would like to move forward with this, with a 30-day, 100% satisfaction guarantee, making this a zero risk. So I'm going to make this super simple for you. My class is going to be in just a few weeks, okay, mid-May. And what I'm going to be doing for the investors who enroll into the program before the class starts, I'm going to give you a 100% risk-free investment of $22.45. I'm going to save you $1,250 US for my early bird enrollment to incentivize you to take action. On top of that, this is just a trust commitment. You're going to be educated by me. I'm going to train you, and from the class dates, you will have 30 days to put this to the test. And within 30 days, if you're not completely 100% satisfied, I'll give you all your money back. Ladies and gentlemen, at this point in time, I want to empower you to take action. And I want you to type your telephone number into the question section box right now. And this is what happens when you type your telephone number into the question section box. You're going to type your telephone number into the question section box. I will have one of my education specialists put on what's called a soft hold. We will reserve a spot for you. It's basically you saying, hey, Josh, I'm interested. I want to do this. I want to have 30 days to really try this out, and then I can make my final decision. Now, when you type your telephone number into the question section box, I will have one of my education specialists contact you. We will answer any and all of your questions. We will put you in a position of great empowerment, and then from there you can make the decision on whether or not you want to move forward. So this is how this works. You enroll into the program today. You get the great savings. You join me for the class. You have 30 days to apply this. After 30 days, you make your final decision to say yes or no. I want to go ahead and recognize the following traders who just typed their telephone numbers in. I want to say thank you to Victor and to Jay and to GID, Greg, John, Chip. I got your telephone number. We'll have one of our education specialists reserve a spot for you. Delt, I got your telephone number. Harding, I have your telephone number. Thank you, Fellaini and Paul, Anthony. Thank you, Stuart, got your telephone number. Lily, thank you so much for the opportunity. Gary, thank you for the trust and for the chance. We'll have one of our education specialists reach out to you, answer any and all of your questions. Now, I do have some mega fast action bonuses for each and every one of you. For those of you who decide to enroll tonight, right now, fast action bonus number 1. For those of you in this room that enroll to the program right now, I will give you 3 total months of my fill in the gap sessions. What does that mean? That means this. I will work with you inside the class, and I will follow up with you for the next 3 months. So you and I will be working with each other for 4 total months, making sure that you have the support, the confirmation, the education, and the mentorship to make this work. On top of that, this next fast action bonus is only available for 19 people. What this is, this will guarantee lifetime ownership to the Matrix tool, okay? So as long as you have charts, you will always have the Matrix tool. After the 19 traders sign up, this is what's going to happen, okay? If you try to sign up to this program after the next 19 people, you will have a monthly maintenance fee. So you will enroll to the program, and then you're going to be paying an ongoing monthly maintenance fee for the Matrix tool. By signing up right now, we can eliminate that monthly maintenance fee, therefore saving you thousands and thousands and thousands of dollars over the course of your trading career. For those of you that would like to be one of the 19 traders, I need you to type in bonus, B-O-N-U-S, into the question section box. And when you type in bonus, that just lets my education specialist know that you would like to sign up tonight and be one of those 19 traders that will be eliminating that maintenance fee. I want to go ahead and recognize the following traders who just typed in bonus. I want to say thank you to Gary. I have you for bonus, and Ray, I have your telephone number. I want to say thank you to Eon. I got your telephone number. I want to say thank you to Eon. I got you for bonus. Julia, I got you for bonus as well. Ken, I have you for bonus. Thank you, Tab. I got you for bonus as well. We have one of our education specialists contact to answer any and all of your questions. Now, because there's only 19 spots available, okay, and for those of you in this room that kind of said to yourself, hey, you know, I've kind of made up my mind. I'm ready to get started now. What I want to do is give you this link. And if you take a look in your question section box, you're going to see this link, and it's going to give you the ability to skip the line and sign up online, okay? And so education specialists, if you could please be so kind, if you could post that link into the question section box for the students that would like to skip the line and sign up online. It seems as if on my side I'm having a challenge posting that link, okay? And so once again, for those of you in this room that would like to skip the line and sign up online, we just posted a link into the question section box for you. This will give you the ability to be and guarantee your spot. Let me go ahead and see if I can do this, okay? And it's going to be bingo. Okay, perfect. So copy, and I'm going to paste it for you right now. There you go. So grid trading course 2245, your savings has already been reflected. If you are not completely satisfied, you can cancel within 30 days after taking the class, okay? First name, last name, address, city, state, zip code, country, phone number, email address, and you are done. You can get started with either American Express, Discovery, MasterCard, or Visa. Type your credit card number in, expiration date. It can take you 30 seconds to a minute max. Ladies and gentlemen, I want to go ahead and say thank you to each and every one of you for giving us the opportunity to work with you. We take great pride in what we do here at Market Traders Institute. For those of you who express interest, stay by your phones. We're going to contact you in a few moments. For everyone else, thank you so much for the trust. Thank you so much for the ability to work with you. And on that note, every day, helping traders find a way. This is Joshua Martinez out.